This is the trading profit and loss and balance sheet for incomplete records for the ordinary level, Mary Henderson 2015. So just going over the trading profit and loss. Our question here, we filled in our details above here on our, first of all, our statement of capital and reserves up at the top. So I have that figure here. We then found our credit sales and included that with our cash sales to find total sales. We did the same thing for our purchases. We found our credit purchases here from our creditors control account. I added that to my cash purchases and I found total purchases. After that, we had an additional couple of notes. We found the depreciation by 25%. It's an expense. We looked at wages and we saw that wages and general expenses would fit in with expenses prepaid. So we had our balance at the beginning of the year and end of the year, and we had our wages figure from our cash payments. And we did our T account there, and we found our P&L figure for wages to be 82,600. Finally, we looked at cash. This is our total cash we've received throughout the year, and this is our total cash that we've paid throughout the year. And obviously what we received here include the balance at the beginning of the year. So if this is all the money cash we had and this is all the cash we spent, we have our cash in and cash out, and if we take that away, we find our difference, and this is our cash for our balance sheet. It's our current asset. So we have everything in place now to finish the ordinary level question, to do the trading profit and loss in the balance sheet. So what does it look like? Well, trading profit and loss starts with sales. This 211,300, I got that from my total sales figure up here, my credit and cash sales. I took my total purchases figure of 118,500, and obviously that is my total purchases figure. Opening stock, there I get my opening stock from the opening figure for stock of 16,500, and the closing figure for stock of 13,200 goes here. It's my normal sales less cost of sales, opening stock purchases, cost of goods available for sale less closing stock is my cost of sales. So sales minus my cost of sales is my gross profit. So again, the only figures I needed here are my two stock figures and the total sales and total purchases figure, and I can get my gross profit. After that, we don't have any details here on expenses apart from the ones we've done in our notes. We have two expenses, my depreciation figure of 5250 and my wages figure, P&L of 82,600. So those two added together are going to give me my total expenses. If I add the two of those up, there are two included here, it gives me 87,500. And if I take that away from my gross profit, I'm left with 1,650. Now, they are my expenses, but I also earned a little bit more. Apart from my sales, I also had commission, and commission is a gain, so I'm going to add that as well. So not only do we take our gross profit and take away expenses, but we now add gains, and commission is a gain. So it's an additional income, and the commission is 6,100. There's no note on it. There's no other income, so I don't need to put it into the first column. You can if you want, but you can just put it straight in here because it's going to be your total gains, 6,100. And obviously I'm adding that because that's additional money in. So I add that to my 1650 and I have a net profit of 7750. Again, total sales, total purchases, these are my two stock figures. I take away my two expenses and I add my gain figure, and I have my net profit figure. So I can go to my balance sheet now, and we've done our balance sheet down here. It starts off as normal with our fixed assets. So my fixed assets here I can take from the question. We're told we have premises here. We're told we have equipment, and we also purchased motor vans. So my premises started at 490, there was no depreciation, so it finished at 490. My equipment started at 21,000 given here, again for the end of the year 21,000. The year was depreciation of 25%, I found that to be 5250, and therefore my net book value is 15,750. Motor vans, I bought them throughout the year for 13,900, so again my balance sheet for the end of the year, my cost was 13,900. There was no depreciation, so my net book value remains at 13,900. I total all that up here, and then I have my total net book value for fixed assets of 519,650. There was no financial fixed assets, there's no investments or anything to add. So my next thing is current assets. Current assets as normal, we see our closing stock for the end of the year of 13,200. I have my debtors at the end of the year of 5,200. I have my expenses prepaid at the end of the year of 700. But I also have cash. Why? Because we looked at our cash here, we saw that this was the cash at the beginning of the year. This was the total amount of cash we had, and this is what we spent. Therefore, at the end of the year, we are left with a cash balance. And we found our cash balance at the end of the year to be cash in minus cash out of 17,600. And that is a current asset. And that's an important figure. It's worth more marks than the other current asset figures as you had to work it out. 17,600 is my final current asset figure because I do have cash. If I add the four of those up, it gives me 36,700. I then have my creditors that I take away within 1 year, and there is only one. It's creditors here of 5,700 at the end of the year. So I can put that automatically into this column. I take it away from my 36,700 because this is creditors and this is current assets, and I'm left with a working capital of 31,000. My working capital is 31,000. And I look at my total fixed assets here of 519,650. If I add the two together, it gives me my total net assets of 550,650. Again, all I've done here is I've dealt with my fixed assets. If there was depreciation, I took it away, and this was my total. My current assets were all given for the end of the year, but I had to find the cash, because remember, if we've this much cash and we spend this much, at the end of the year we will have a cash balance, and we found that to be 17,600. Again, my creditor figure for the end of the year was given as well. You take that away as normal, you find your working capital. This is your excess current assets over your creditors, so it's a positive. I add it to the total fixed assets and I have my total net assets. The last part of the question is your finance by. There was no creditors amounts falling due after 1 year because we don't have a loan or debentures or mortgage, but we do have capital and reserves. So that's the next heading, capital and reserves. These two next figures, where am I getting this from? Capital at first to the first. This is my capital and reserves figure. I worked this out in part A, the very first part of the question. At the start of the question, I found out how much my capital was at the beginning of the year to be 546,500. So 546,500 is my capital at the beginning of the year, and I've put that in here. My next one here is add my net profit. Well, where did I get that from? That was our figure that we got here for our total profit and loss. Our net profit we got to be 7750. So I'm going to add my net profit onto my capital, and I get 554,250, and then I take away my drawings. So my drawings figure was given here in the question under cash payments. There was no adjustments. It was 3,600. I'm going to take that away, and then finally it gives me my balance at the end of the year of 55650, my capital employed. And as you can see, both of those figures are matching, therefore the account is balanced. And that is the trading profit and loss and balance sheet for the ordinary level question. Now, after the ordinary level question, I want you to now look at higher level. So I have a question done up here, and we're going to start. I'm going to make a small start in this question just by doing 3 different notes. So this is a higher level question. This is what it looks like, just to show it to the side. So this is the details at the very top. Look, this looks like quite a normal question. We have our figures at the beginning. We have our our assets and liabilities at the beginning of the year. Then we're told, because the question is called incomplete records, we're told that we did not keep a full set of accounts, but we had the following information supplied. And as normal, you have a list of different things involved, but the list here gives us cash payments, bank payments, and bank lodgements. So this is cash out, bank, again, bank money out. We'll have to keep these separate, but they're the same concept. And this is money in to my bank. We then have 3 different paragraphs that we'll be going into detail on soon. And the last paragraph is, as normal, we're told at the end of the year, we're told details about assets and liabilities. So assets and liabilities at the end of the year was closing stock, including heating oil, debtors, creditors, cash, and electricity due at the end of the year as normal. So we're only going to focus on 3 notes for this question. The very first thing we're going to look at is what makes incomplete records different to maybe some of the previous questions we might have looked at. Is the question starts off by telling us that E. Kelly purchased a business for $205,000. And whenever you see that somebody purchased a business for $205,000, now there's the potential for an additional working to be required. Basically, if you were to buy a business like Apple, Apple are a hugely successful company. So if you were to buy them, not only are you going to be calculating how much assets Apple have and how much liabilities they have, but you'll have to pay additional payments as well. And generally this can come from things we call intangible fixed assets. So things we can't see. Like Apple's brand name is so powerful. Their goodwill with their customers is so powerful. So what you have here is we have our first note, and it's called goodwill. And what goodwill is looking at is basically, for some company like Apple, there's such a positive reputation that they have that you have to pay more to buy a company like that. It's not just a question of calculating how much their assets are and take away their liabilities. Because this company has such a powerful reputation, you have to pay an additional premium. Just because if you own a company like Apple, you can be so successful because of the brand name and brand image, that there's additional payments that generally a company will make, and we call that a goodwill payment. So goodwill, what we're looking at here is there's 2 different things we need to look at. The first one is purchasing price, and the purchasing price here is $205,000. The second one we're going to look at here is the actual value of the business given from the assets and liabilities. So it's the business worth. And we have found that several times before. To find that, all we need to do is calculate the total assets and take away the total liabilities. So we've everything here given at the top. We've premises, stock, debtors, and insurance prepaid. We've 4 different assets. So if I add those up, and I've done so here, if I add up all of those assets, I'm just after showing something else, but it doesn't matter. If I add up those 4 assets for premises, opening stock, debtors, and insurance prepaid, my assets are $202,730 at the beginning of the year. I have 2 liabilities, trade creditors and wages due. If I add both of those up, it gives me $18,400. So again, I'm adding the $17,200 and the $1,200. So this is my total assets at the beginning of the year, and this is my total liabilities at the beginning of the year. If I take away the liabilities from the assets, I'm left with what we call the worth of the business, and it is $184,330. So let's look at this here. The worth of the business, assets minus liabilities at the beginning of the year, is $184,330. But E. Kelly paid $205,000 for the business. Why would somebody pay make an additional payment for a business over what it was worth? As we discussed, you have things like reputation, brand name, brand image, and that's what we call a goodwill payment. It's an additional money that you'll pay for a company. You're not just going to pay to own their premises. You're not just paying to own their stock. You're not just paying for these kind of payments. There's additional things, and brand is so powerful that E. Kelly has decided to pay €20,670 more just for owning the brand. So this is an intangible fixed asset. It's a fixed asset, but it's intangible. And intangible means we can't see it. As opposed to premises, which is a tangible fixed asset, this would be an intangible fixed asset. So that's our first working right there, and you'll always have to do this here for this style of incomplete records. You'll have to find out how much additional money the purchaser paid for the business. You have your purchase price and you take away the worth of the business. You don't need to do a full statement of capital and reserves. We're not asked to do it. So you can just simply add up the assets figures in your calculator and then take away the liabilities figures, and just obviously make sure to get the figure correct. Otherwise it'll be incorrect here. The other two notes we're going to look at is the first one here, because this is called an incomplete record. They didn't keep a full set of books. There are some things that we might need to calculate that mightn't be calculated for us already. And the first one is we don't know how much cash we have at the end of the year. Or sorry, we don't know how much cash sales we've had, throughout the year. We're told a couple of different information about cash. We haven't been told we have cash at the beginning of the year. We're told that we had lodgements, general expenses, and purchases. So this is all the money we've paid out for cash this year. But at the end of the year, we only have €550 of cash left over. So how much money in cash did we make this year? So if we look at this here, this is going to be our cash account. Excuse me, I have to just go back over this again, see if I can unhighlight it. So this is my cash account. This is just a normal T account I'm going to do for cash. If I look here, I've just included at the top here, I've included a balance of the first of the first. It was 0. There was no cash at the beginning of the year. Usually there might be. All I'm going to do now is I'm just going to list the 3 lodgements that they give us, the 3 different payments they give us. Lodgements, general expenses, and purchases. So lodgements of 94,000, general expenses of 22,500, and purchases of 51,000. They were all cash payments. So they're all money that's gone out of my cash account. So I put them all on the credit side. I also have the paragraph down here at the bottom where they say that Kelly took from stock to the value of €80 per week, which is not going to be too relevant for now. But there is an additional bit of money about cash here, because they said that Kelly took from cash of €60 per week for household expenses. So we have these figures here for cash payments, and we're not told how much our cash sales were. We're told bank lodgements. We're not told how much we lodged to the bank or how much lodged cash we had this year. But we are told something about cash drawings. So those drawings here. So Kelly took from stock to the value of €80 per week for household expenses, and Kelly took from cash of €60 per week for household expenses. So if you have €60 that you take out every single week, and it's for household expenses, we call that drawings. And drawings, quite simply, to find my drawings, they told us it was €60 per week. There's 52 weeks in a year, so €3,120 was taken from cash as drawings. So that's an additional one, and again, this is always given here for every question. You'll have your cash payments, and then you'll have an information here about cash drawings. So I put in these 3 that they gave us. I put in the drawings. There was no balance at the start of the year. So if I add all those up, it gives me my balance on both sides. Sorry, before I do that, I have my balance at the end of the year. My cash at the end of the year is 550, which means I have cash at the end of the year of 550. So let's look at this here. My balance brought down is going to be 550, and therefore my balance carried down is going to be 550. If I add all these up, there's nothing here on the debit side, but if I add up everything here, it's going to give me 171,170. So that's my balance on both sides, 171,170. Apologies, I was going to underline it here just to make it some way similar to a normal one we've seen before for the double entry lines. So that's my balance on both sides. Everything is listed here, adds up to that total. There's nothing here, so therefore my missing figure here is actually going to be my cash sales. My cash sales are 171,170. And that's how I deal with my cash account. I've just listed the 3 different information they give us here for cash payments, and I've taken into account there's €60 per week for 52 weeks of cash drawings, and that's my cash balance at the end of the year. Totaled up both sides, the difference here, cash sales. The very last thing we'll do, and it's quite similar to this, is we're going to do a bank account because they haven't told us how much money we have in the bank at the end of the year. So we have bank payments and we have bank lodgements. We're not told how much money we have in the bank at the end of the year. We're told a little bit else inside here as well, and at the beginning of the year we weren't told anything about our bank, so we have nothing at the beginning of the year either. So To look at this here, the first two things I'm going to do here, I'm going to list in total lodgements and total payments. So where did I get those figures? If you want, you can write them individually, but I just decide, just for speed, to write them in as individual lines. My total lodgements of 129,600 are coming from these three figures here. Just like cash payments, we're looking at bank lodgements. These are the three. This is money I lodged into my bank. It's money in. So that's money into my bank and putting it on the debit side. Bank payments is money out of my bank. So I'm putting that on the credit side. And there is a list of them here: equipment, creditors, light and heat, interest, insurance, charity, vehicles, and rent. If you add up all of those figures, it'll come to 131,500. So that's my total payments, and this is my total lodgements. That's a lot of my bank dealt with there. There was no figure at the beginning of the year. There is no figure at the end of the year, so there's no balance carried down or brought down at the end of the year that we're given. This is to do with drawings. This is separate again, but this little paragraph here, and there'll always be something like this for this style of question, has information about bank. So Kelly, the owner of the business, borrowed 72,000, part of which to buy a warehouse costing 60,000, and we're told information there about paying off the loan and paying off interest. We won't need to deal with that now, but we're told that Kelly borrowed 72,000 and they bought a warehouse for 60,000. What happens to your bank account when you borrow 72,000? Well, I know we're going to need to pay back that, so we'll have a loan interest that we'll have to pay back. We'll have to pay back the loan as well. But when you borrow 72,000, all that happens is your bank account goes up by 72,000. So because Kelly borrowed 72,000, I need to increase my bank by 72,000. They bought a warehouse for 60,000. So if you buy a warehouse, what happens to your bank? The bank is nice and easy to understand, because if you buy something for 60 grand, there's money going out for 60,000. So that's money going out for 60 grand here. If I look at it here, I have a balance in both sides. My balance in both sides is going to be 201,600. If I add everything up here, this side is a little bigger. This side money adds up to 191,500. So there's a difference there of 10,100. And that 10,100 is going to be my balance carried down. So you can see that here. My balance carried down of 10,100. And then obviously that becomes my balance brought down here of 10,100. All I've done for bank: add up total payments, put it in here. Add up total lodgements, put it in here. And then we look at this here, we found that they borrowed 72,000, which means your bank account goes up by 72 grand at that moment in time. And then we bought a warehouse for 60,000. Add up the balance on both sides, and we see here that there was a balance carried down is the missing figure of 10,100, which means at the end of the year they had cash of 10,100. That's the start of a higher level question. It's for E. Kelly from 2012 or 13.